Hello, this is Doug Gerlach, President of ICLUBcentral. Tonight, our presentation is Power Stock Searches with MyStockProspector.com. We're going to take a look at this tool that's produced by ICLUBcentral that helps you with your stock screening needs. My Stock Prospector is an online tool with a lot of functionality focused on long-term, high-quality growth stock investing. So tonight, we're going to take you through from the most beginning basic methods of using the tool all the way through some advanced tips. So thanks for joining us. Before we get started, let's review our webinar best practices. If you're having technical problems at any point during the presentation, we suggest you contact GoToWebinar directly via their toll-free number, 800-263-6317, or on their website at gotowebinar.com. It may happen tonight that the sound or graphics may become choppy or drop out. This could be a problem with your side, so we suggest that you turn off any unnecessary programs that might be running on your computer, that you don't connect using Wi-Fi if you have a hardwired connection available, and you can always listen using the telephone, and that will free up your computer to display the graphics part of the program. If you have a question, you don't need a microphone. You can just type it into the GoToWebinar application box. I'll be monitoring those questions and doing my best to answer as many of them as I can throughout the presentation. Also in that GoToWebinar application is the handout for tonight's presentation. So go ahead and click on that to save a copy to your computer, open it up, print it out quickly if you want. We will make that available when we archive this webinar presentation as well. So let's begin talking about power stock searches with MyStockProspector.com. It's a good idea to start with the basics, and let's talk about what is stock screening. My Stock Prospector is a stock screening tool, and stock screening is something that's only really been possible in the era of computerized databases. Stock screening allows us to use a computerized database of company information to help you find stocks that meet particular criteria, and you have to decide what those criteria are. But we think that screening tools are especially useful in the Better Investing Toolkit 6 world to help you find companies that meet minimum criteria for growth rates, for quality, for valuation. And we can use these tools to help you improve diversification by looking for stocks that meet certain other attributes, such as companies of a particular size or market cap, companies in a particular sector or industry. So there's a lot of flexibility and a lot of power associated with a stock screening tool that you can utilize. Now, My Stock Prospector is really the only internet screening tool that's devoted to fundamental analysis. There are a lot of other screening tools, but they're mostly tailored towards technical analysis, towards the chart readers, towards momentum trading, day trading, not looking at the kind of fundamental information that we as Better Investing members and Toolkit users are looking for in our portfolios and in our club portfolios. So that really distinguishes MyStockProspector.com. Another distinguishing factor is that the data that we use is updated weekly in the program, and it comes from Morningstar, and that's the same data that's used in the Stock Central and the other iClubcentral and Better Investing tools. So that is a big bonus. That means when you screen using the set of data in My Stock Prospector, and then you open up those companies in the SSG Plus at Better Investing or in Toolkit 6, you're not going to see big variances. It's all going to be based on the same underlying data, the same growth rates. And another distinguishing factor that really makes My Stock Prospector stick out is that we have 10 years of company history. So there are hardly any that I know of, other screening tools that allow you to search for 10-year growth rates. So that really allows you to tailor your searches for the Better Investing style approach. There are 120 different criteria that you can screen on. There's a complete list and definitions of all of the criteria in the help section of the program. So if you want to know more, I definitely suggest that you check that out. Now, we developed this program based on a old tool that was built in the 1990s using Windows, and that tool required users to download data on a weekly basis, and before that to load data from CD-ROMs and even diskettes before that. So by bringing it onto the internet, we've eliminated all of that. We take care of all the data updates on the back end, and when we modify the program, we don't have to worry about updating users. Mac users can use the program just as easily as Windows users or Linux users. It'll work on a tablet as well as a desktop PC. The pricing of the program is $49.99 a year, and that's our introductory discount offer. But we have 1, 3, and 6 month subscription terms available, so you can check all of that out at mystockprospector.com. And we even have a free demo that you can play around with after tonight's program. If you're not already a subscriber and you want to see some more, you can play around on the free demo using old data, but that way you can get a feel for how to construct queries and the number of companies that result from the type of searches that you might be looking at. Now, as on a more advanced basis, MyStock Prospector can be used as a data mining tool, which means that you can go into the database and look for data on stocks that you already own. In effect, a custom report generator, and we'll take a look at that in the advanced section of our presentation tonight. When you do that, you'll get always current data on and those customized reports that you build for the stocks that you want to follow. You can export the data from the program into spreadsheets, so those of you who love playing around in Excel, you can take this data and format it and create all kinds of beautiful reports, or combine it with data from other sources to really get you the information that you want to use. You can also review industry averages as well as all of the companies in a particular industry or sector so that you can line them all up. You can identify industry trends. You can look at margins by all of the companies in a particular industry. So there are all sorts of additional ways that you can use the program other than the obvious answer, how do I find stocks that look good that will fit in my portfolio? So let's take a look at the process of building a screen. We've broken it down into 3 steps. The first is the step of defining the criteria. What is it that you're looking for? Are you looking for stocks that are growing sales and earnings at a particular rate? Are you looking for companies that have a particular dividend yield? Are you looking for companies that have that are in a particular industry or sector, or some combination of any of those fields? So that's all part of defining criteria. Then after you've defined the criteria, you can define the report, which means how do you want to arrange the fields on the results screen? Do you want to bring in some extra information, such as the current price, perhaps, that you aren't searching on but might be useful to take a look at? And then finally, you can view the results. And if you're not happy with the results, then you can go back to step 1 and define the criteria, adjust, loosen, or tighten up particular fields to get the result sets down to a manageable number of stocks. So this process, once you get the hang of it and understand how it works on the website, can be used whether you're a beginner, an intermediate, or a more advanced user. Now, we have set up the program so that beginners can get started right away without worrying about the obvious question, what numbers am I supposed to put into all of these different 120 different criteria? Which one should I select? And we know that oftentimes beginners are going to be a little overwhelmed and not have the best idea. If you're more experienced, you probably have a better sense of what to use. But for beginners, we have predefined screens, and these screens are set up so that you just need to click on a screen and you see the results, and you can then look at those companies and decide which might make for further review, further analysis. After all, this is not a magic box tool that will give you stocks that are guaranteed to go up. The idea behind screening is we're going to eliminate unreasonable companies and focus on the few companies that seem to fit our particular needs. So in the predefined screen section, once you log into the website, up on the top part of the menu bar over towards the right, you'll see the predefined screen section. And we have 7 predefined screens right now, and you'll find their names along with the descriptions next to them. There are 2 that are better investing style screens, and you can see they're similar, but they have a little bit of variation. The first one, Better Investing 1, looks at companies that have 10-year revenue and earnings growth rates greater than 15% with stable margins, stable returns on equity that are selling below their average PE ratios. Better Investing 2 looks at only companies that have 5-year earnings growth rates faster than 15% and projected growth, 5-year growth rates greater than 15%. Also selling at PEG ratios, so PE ratios below their earnings per share growth rates, and with a projected total return greater than 15%. So again, slightly different, but still focusing on some of those attributes that Better Investing members are familiar with. And then there's a sample growth screen, a sample quality, safety, and value screen, and one that I call iClub Growth that I created to demonstrate some of the use of the program. So to use one of these, all you have to do is come over to the right and click on the button or the little magnifying glass and execute the search. And if we select that iClub Growth screen, we'll get a list of companies there. So here we have about a dozen companies that have passed this particular screen. And we're right into the program. So it was just a couple of clicks to get to this point, and we have a list of companies. Many of these companies may be familiar to you if you're following the Better Investing approach. But as the note says here, you can click on the column heading to sort in ascending and then in descending order any of the column headings. So you might want to start with the historical growth rate and search for companies with the fastest growth rates. You might want to look at the quality ratings. So it's really up to you how you want to tackle it. Now, just a couple of points on this screen you will see over here on the left side, there are 2 companies with the ticker symbol CCL and the suffix TO. That TO stands for the Toronto Stock Exchange. And there's another one down here, DOL.TO. And there's also HEI and HEI.A. So each of these companies, these 2 companies, HEICO and CCL Industries, have multiple share classes. So we have a record for each of the share classes. So that's just looks like a duplication, but the way that the database is set up, every ticker symbol is a unique record and tied to the fundamentals that are beneath it. So this is a pretty straightforward, and I think anyone ought to be able to check out these screens this way. If we continue, as you move your mouse over a particular row, the name pops up. And this would be useful. You can see on this screen on the far right, it says quality rating. We could have 30 or 40 different columns if we wanted to. And on that very wide report, as the screen scrolls, the ticker symbol on the left remains fixed, but that might not give you the information you want to know. So whenever you move the mouse over a particular row, it pops up with the company name to give you that extra bit of information. And even better, if you click in a row, double-click in a row, you'll display this historical graph. And this is a 10-year semi-logarithmic graph of the company that you've selected. If you look down at the bottom, you can see the historical sales growth rate for all years pictured and the historical earnings growth rate for all years pictured. And so You can see in this case a lot of consistency for this company, ticker CMD, that's growing at a very consistent rate, with earnings growing somewhat faster than sales over the last 10-year period. Now up here on the top left, you'll see a series of buttons, and by clicking on these buttons we can go forward and backward through the entire list of results, the companies in the results set, and that will let you visually determine if a company looks attractive to you. So you don't have to rely on the numbers. So this is a very much an SSG focused, stock selection guide focused approach to reviewing the results and determining if, hey, this company looks like it might fit on the stock selection guide. So let's go ahead and add that to my my research list, and that I'll do a little more analysis on. If you want to understand a little bit more about how the screen is created, click up here on the selected criteria section, and it'll pop open the definition of how this screen was created. So in this case, you can see a lot of fields that say IA-current, and I'll talk about that more later. That means that it's the industry average for the current field. So in this case, the historic 5-year earnings per share growth rate is at least the industry average of the current field and the maximum of any company in the database. So in essence, we're saying, instead of saying faster than 15% or 12% or 18%, we're saying faster than the average for companies in the industry group for each company. So if the first company here is Baidu in the internet content and information industry, so it's here because it's at least its 5-year earnings per share growth rate is going to be higher than the average for the internet content and information industry. I'll talk about that more later. If you look at the quality rating, you can see the quality rating is between 3.4 and 8, which means, and we'll talk about that as well. But so the selected criteria is a little bit complicated at first glance, but you'll quickly pick up how this works as we go through the program. Over here on the right, you can click on the Edit Criteria button, and you can customize this on your own. So you can take these predefined screens and you can fix them so that they work better for you. You can adjust the values, you can add additional values. So you have the ability to do that. It doesn't affect the original predefined screen. No one can change that except us on the system side. But you can certainly create a version of it that works for you, that has the criteria that you are looking for in your particular stock searches. So you have that capability. In any screen, and any screen that you create, you can review the selected criteria at any time. Now, some additional navigation tips across the top of the screen in the results header there are a couple of options. You can set the results to display up to 100 companies. It defaults to 10. But it's your preference if you'd rather see 10, 25, 50, or 100 at a time and scroll your monitor, scroll the program up and down on your monitor. You can do that. The expand table allows you, if you've got a wide report set with a lot of columns, the table will actually expand a little bit and take up more of the horizontal width of your monitor, so that can be useful. The exclude, include industries button here, we'll talk more about industry records, but if you have a search where industry records are showing up, and you'll know them, they're in red italics, you can eliminate those by clicking the exclude industry buttons. We also have this button, exclude junk. And we'll talk more about junk companies. Junk companies, you have to set up your own junk screen. But this could be penny stocks. They could be stocks in a particular industry. You can define your own junk criteria, and we'll take a look at that as well. And that's just a way of getting rid of companies that you know you're never going to look at a stock that has a very low stock price, or maybe a stock that's on a Canadian exchange, because we do cover all North American companies. So you can so that junk button allows you to get rid of those from your results. The next little icons here, we've got our save criteria icon, which allows you to save it. We've got our edit criteria, so you can go back and edit, change the criteria of a screen. We've got the little export button here. This allows you to export in an Excel or spreadsheet readable program. And then finally, we've got the email button here, where you can email your stock screen to club members or other friends and colleagues. They can view the results, but they can't edit them, and they don't need to log into the program. This is great for investment clubs where one person has a subscription to My Stock Prospector and does the screening, and then emails the results, the actual screen results, to the members who click a link, and from there they can view the results, and they can decide which companies they might want to work on for the next club meeting. And then finally, the filter screen allows you to filter on company names. So if you've got a screen results with with 100 or more companies, and you want to quickly go to a particular company, you can type it in there, and it'll filter out everything that meets that particular company name criteria there. So this is on all of the results. You'll see this navigation header here, both on the predefined and on the custom screens. So you'll get comfortable with that pretty quickly as you use the program as well. So now that you know how to use the predefined screens, let's go ahead and now start talking about the next step, which is creating custom screens from scratch. And as I said, it's great to use the predefined screens as a jumping off point, where you can start using those to modify your own screens that you would save and adjust. And that's a great way to start using the program and get up to speed with the tool. But at some point, you're going to need to start at step one and define the criteria. And remember, we talked about our 3 steps: define criteria, define report, and view results. So here we're going to start with a sample screen on mid-sized growth stocks, and we're going to start by defining the criteria. And we've got a little tool here that you can use to set the minimum and or the maximum values for each field. And this gets to be is a little complicated to use, but the idea is we've got a field here for the minimum value you're looking for, and over here there's a field for the maximum value in the database. We've also got down below, you can see the minimum values of all companies in the database for that field, and the maximum value. So this is 10-year historic revenue growth rate. You can see the lowest value of any company is a 0% growth rate over the last 10 years, and the fastest growth rate is 242.7 on an annualized basis. So again, that's an outlier, but you'll see that throughout the program, some very high figures. So in this case, the user has typed in 15 because they want 15% at least growth, and they don't care on the upper end so much, so you don't have to set a value over here, but feel free. If you would rather exclude super high growth rate companies, feel free. You could set this between 15 and 30, for instance, if that makes you more comfortable. It's probably not going to affect your results as you go through the program. Now you'll notice there's also these slider bars, and you can slide these and the values will adjust automatically. So in some cases, feel free to grab onto those sliders and the values will change. Otherwise, you can just come over here and type in that value. So this is how all of the fields are adjusted throughout the program. There are a couple of exceptions. There are a couple of fields that have selector boxes or sort of on or off. For instance, there's a field for ADR, so a company's either an ADR or it's not an ADR. So there's no numerical value for that. The industry groups as well, industry groups, sectors, stock exchanges, ticker symbols, those are all text-based fields that you'll see. So using those criteria entry tool, you're going to be building out your particular criteria set. They're divided into 8 categories. We have growth, which is pretty obvious. What are the historical growth rates of dividends and revenues and earnings and net income and cash flow? There's a lot of things in that particular group. There's value. That's where you'll find PE ratio type and percentage to 52-week high and low. Quality, you'll find the pre-tax profit and return on equity trends. And again, this is something that's really unique to the program. We're going to take a deeper look at that. Safety, that's where you'll find company size and dividend payout ratios. The projection is where you'll find analyst estimates of projected growth. Number 6, proxy judgment is a little bit interesting. It's really for advanced users, but we actually calculate SSG projections, projected values. We apply default judgment mathematically, so not with any sense of a rules-based set to come up with total return figures and other items. So these can be acceptable for mature growth companies. For every other company, they can be wildly out of whack, so I tend to stay away from those. We have trend, and then we have other, and that's where you'll find ticker symbol, industry, sector, etc. As I mentioned, the help section has the criteria in each of these groups and the definitions, and I'll admit that I sometimes click around trying to find a particular criteria that I'm looking for. But you can print out that help guide, and that would help you know exactly where a particular criteria you might be looking for can be found in those 8 categories. So we're going to look for a group of mid-sized growth stocks today. So very simple, straightforward screen. We're going to look for companies that have a historical average annual 10-year revenue growth rate and 10-year earnings growth rate greater than 15%. For quality, we're going to look for companies that have an earnings per share R squared of 0.9 or higher over the last 10 years. And R squared, if you're not familiar with it, is a way of measuring how straight the line is formed by a series of points. A perfect line, a perfectly straight line has an R squared of 1.0, and you can't get any more straight than that. A very erratic line might have an R squared of 0.5 or 0.6, or 0.7. So by saying that we want the R squared of the earnings per share growth to be greater than 0.9 means that it's going to look pretty straight. The 10 years of earnings on our graph are going to be very close to a straight line, not a whole lot of variability there. And that's just a way of measuring the stability and quality of earnings per share. The trend pre-tax income, this is section 2A of your stock selection guide. The percentage pre-tax profit, the pre-tax profit margin. So again, what's unique about My Stock Prospector is instead of saying, show me companies with profit margins of 15% or 20% or better, which would eliminate a lot of great companies in low margin industries, we can say, show me companies that have a pre-tax income that's trending higher or is stable over the last 5 years. And we reject companies that have margins that are declining or erratic or that are very low. So that's just a way of isolating well-run businesses into your result set. And then finally, we said we wanted mid-sized companies. So we want sales between 1 billion and 10 billion. And so that is in the safety category. There is the annual 12-month sales of the company. and we're going to enter it in millions. So it's 1,000 million and 10,000 millions. We have to make sure to make that adjustment when we're entering sales. They're always in millions. So we're looking for companies with sales between $1 billion and $10 billion. So this is a very simple stock screen. You'll notice what's missing from this screen is that there's no PE ratio. There's no valuation metric included. And that's my personal preference when I'm building screens. You know, if we searched for companies that had all of these attributes and were buys right now, by the time we might finish researching them, they might not be in our buy zone anymore. And likewise, you know, I want to look for quality companies, and I'm willing to wait for them to become attractively priced. So by searching for the fundamentals first, and then I'll make that valuation determination later on, and I'll put those companies on a watch list, and I'll update them each quarter, and when they do fall into my buy zone, then I'll be ready to buy them at the most advantageous price, not simply at the next club meeting because we've got money to spend. That's not the way to go about building a high-quality portfolio. But again, that's my personal preference. I keep the value out of it, and I'll make that valuation decision on my own. So here's our screen. So I'm going to jump back to the program now, and here we are in section 1, the define criteria section over here. We've selected growth. That's the default when you get started. And here is the field list of all of the fields that are in the growth category. And as I mentioned, we have our revenue growth for the last 10 years, 5 years, 3 years, 1 year, the last 4 quarter, and the last quarterly revenue growth, so the most recent quarter to the year ago quarter. The same thing for earnings, the last 10-year earnings per share growth rates, 5-year, 3-year, 1 year, the last 4 quarters or trailing 12 months, and the last quarterly earnings per share growth rate. We have the historical 1, 3, and 5-year price growth. We have the and the rest of these, we have the dividend growth, book value growth, cash flow growth, implied growth, and historical share growth. And these are all for the maximum number of years in the database for each particular company. So you can't look at the dividend growth for the last 3 years. All we offer is the dividend growth for the entirety of the company's history that we have up to 10 years. So from this point, we're going to need to select those fields that we wanted to add. And remember, we talked about the 10-year earnings and 10-year revenue growth rate. So we're going to select them, and you can see when we select those, they turn a light shade. They become highlighted. Then we click on the arrow button. The values are displayed on the screen. And then here's where we would type in our 15%. I'll move my arrow along here so you can see our 15%. And then once you've done that in both places, up here there is a button that says Running Totals. And this will give you the number of companies that pass on a running basis. So you can see after the first field was created and entered, we eliminated something like 7,000 plus companies to get down to 744 companies that had 10-year revenue growth of 15% or more. When we added the second criteria, we eliminated another 440 companies. So we have 307 companies with 10-year earnings per share growth and revenue growth greater than 15%. So that's pretty straightforward. 300 companies is still a lot to do with the stock selection guide, so we're going to continue on to our next category, quality, where we're going to add the earnings per share R squared over on the left, that we wanted that to be greater than 0.9, or you know what, let's make it 0.85. That's pretty close, but about the same. So we've added that there, and then the trend pre-tax income. And you can see over here we've got our trend pre-tax income. We didn't have to enter numbers here. There's a symbol of pluses and minuses and an even side, this is something unique for the program. Let me show you how this works. We've got for both pre-tax income and return on equity, we've got fields that measure the trends of Section 2A and 2B of the SSG. And they're actually identical, the trend and the rating fields. If you prefer, you can use the ratings. They're on a 0 to 6 basis, or you can use the trend, which gives you that little series of boxes that you can turn on and off. So even is a rating of 3, slightly up is a rating of 4 or 1 plus sign, plus minus is even better at 5, and then plus plus is a rating of 6. And then on the other direction, a rating of 0 or minus minus means it's steadily declining. One minus sign as a rating of 1, and minus plus is a rating of 2, which might be acceptable, but still is not, it's below an even trend into a downtrend. So 3 or better is generally good on the rating side. And you can see this little box here. When you click on these items, they turn in, they become highlighted and become a little more easy, and that indicates which ones you've selected as you go through the process there. You know, I like looking. So you don't have to remember the 0 to 6 scale, the trend that gives you these little boxes. It's easy to look at the even and then the plus plus and to know which side you want to go on. And if you want to be a little more aggressive, you can accept maybe the one, you know, the plus minus on the minus side. But that's how those work. So those this criteria would give you resulting companies that look pretty good on Section 1 and Section 2 of the stock selection guide, which is you know, the intention of those trend and rating fields. So we're going to add in, finally, go to the safety group and add in sales. And as I mentioned, we've got to convert our $1 billion to millions. So we've got 1,000 million at the bottom and 10,000 million or 10 billion at the top. We've come back and clicked on the running totals button again, and it gives us our results now of 9 companies that have passed this screen. So we have very quickly whittled down the number of companies in the database, which is around 8,000, to 9 companies that have good growth of earnings and sales over 10-year history, relatively strong stability of earnings growth, have margins that are not deteriorating, they're at least even, and sales in that mid-sized company range of $1 billion to $10 billion. So I guess the proof is in the pudding. Let's go ahead and look at which companies pass as of today. But before we do that, let's talk about how many companies we should be searching for or hoping to find in our results set. I mentioned that there are 9 companies that have passed the criteria that we set up here. If you only have, anytime you have less than around 10, maybe that your criteria are a little too restrictive, too tight. If you have 150 companies, well, that's, again, too many to do SSGs on, and so you're probably a little too loose. You're too expansive in your criteria. So using that field totals button allows you, the running totals, the field totals button allows you to see for each field how many companies pass that particular screen. So if we go back here, you can see there's another button called field totals, and that field totals button will show you on each row over here how many companies pass. Running totals subtracts as you go. So you can see this side we're using running totals because every field, it gets smaller, We're eliminating companies until we get down to the very end. Field total shows you the number of companies in each criteria. So if you've got a field where 0 companies pass, well, then you know you've got a problem with that particular field, or else you don't need it. if you eliminate every company in the database with a single field, that field has to be adjusted somehow. So maybe you made a mistake, there's a typo, for instance, the values of R squared have to have a decimal place. Maybe you didn't convert sales from millions to billions, so you ended up with companies that were too large. So that's how you can kind of troubleshoot as you go along. I think that between 10 and 30 results is a good goal. I think 9 companies that's close enough. I know this is a fairly restrictive screen. But if I wanted to, I would go back and I would change those 10-year growth rates perhaps and maybe lower them to 14% or 13.5 or something like that, just to see, or maybe reduce the sales growth rates to 14 and see if that loosens up some additional companies and gives me some additional options. I think 10 to 30 is a good result. If it could be that a group of 40 companies is also can be winnowed down a little bit, but 60, 70 companies is just way too broad, and I would look at adjusting that. The problem that comes when you've got too many companies is you start to cherry pick the results, and you start to look for familiar names, and you start to ignore the companies that you haven't heard of perhaps. When you've got 9 companies or 10 companies, you or your club could quickly do SSGs and do some research on those companies and see if you can identify some reasonable candidates. So before we look at the results, we want to go to step 2, which is to define the report. Here's where we can add additional criteria, such as company name. The ticker symbol displays with every results screen, but sometimes the ticker symbols are not as descriptive, and if we knew the company name and the sector and or the industry, we could add those. That would give us a little more information about the stocks that we're looking at. We could also add the PE ratio and relative value and the 52-week high and low prices. These give us a little bit of a sense of, is this stock maybe in a reasonable valuation right now, or is it a little expensive, like many stocks in the market, or is it a little cheap, like there's something going on that might create a buying opportunity for us. Again, just to give us a sense of perhaps guiding where we go in our next step analysis. So these are the report. Not only is how we arrange all of the fields that we use to screen on, it's also giving us that additional informational fields that provide the insight but aren't used in our search criteria. So the define report screen looks exactly the same as the define criteria page. We've got our groups over here on the left. We have our field list. So here's our different groups. We're going to start with the other list. Here's our field list. We're going to select the company name, the industry, the sector. I always like to see those. Sometimes when you get a number of companies in the same industry group or in a similar sector, that's a sign that maybe there's something going on there that is providing an opportunity for us. If people are particularly negative about a particular industry, that might be kind of an opportunity, or there's some trends there that we can identify. And then the current price and the 52-week high and low prices are here. So that, again, gives us a sense of, is this stock at an all-time high price, or is it somewhere in between, or is it closer to the 52-week low, which again might mean an undervalued situation for us. So we select them, and you can select them all. You can see they're all highlighted here. So we've selected them all. We click on the arrow button, and then those fields all come over to our list just like that. We'll go next to the value section. We'll add current PE and relative value. Relative value is just the percentage of the current PE to the average PE. So if the relative value is 1 or 100%, that means the current PE is the same as the historical average PE. If the relative value is 90%, That means the current PE is 90% of the average PE, so that could be an undervalued situation. If the relative value is 130%, that means the stock is an expensive stock relative to where the PE ratio has been in the past. Now, that doesn't necessarily mean that the PE ratios of the past will hold in the future, but it's a quick thumbnail way of determining the current valuation levels. So we do the same thing. We can add those report fields. Once these fields are here, we can click and drag to arrange them in the desired order. So company name is down here. I want to put it up next to the ticker symbol. I want to move the industry and sector up there as well. So I'll just click on those and drag them, and you can see that now the order of my report is that I have the symbol first, the company name, the industry, the sector, the sales, and then growth rates, earnings, then have the pre-tax profit trend, and then finally the price and valuation on the at the bottom there. So I can click and drag and arrange that report just like I want to see it to make the most sense for my purposes. And so once you're done with your report, it's time to view the results. The same as with the predefined criteria. The ticker column on the left side is fixed, so it always remains on the left side. On wide tables, when you mouse over, you can pop up that company name. You can see the mini SSG graphs. You can sort by any column, ascending or ascending order, and you can return to defining the criteria or adding more fields to the report as you go. And so here are the 9 companies that passed our mid-sized growth stock screen that we just created there. You can see over here on the far right in the trend pre-tax income column that all of these companies have even or better pre-tax profit trends. You'll see a lot of familiar names here. Chipotle, obviously, when you look, if we scroll over, and you'll see more on their PE ratio, very low because of the sell-off, the problems they've been having. A couple of companies here, several companies here followed by our small cap informer, including New Oriental Education, F5's, Middleby, and Skyworks. Priceline Group is tracked by the Investor Advisory Service. So that is just a whole lot of familiar names. Ulta Salon is one that's highly followed by a lot of our investment clubs that I see when I travel around the country as well. So some very familiar names popping up on this list, as well as companies that are being followed by many investors who use the better investing style. So that's just a great way to it kind of gives you a little more comfort that this would be a good list to take a look at these companies for your club study when you're trying to find some more mid-sized companies in the portfolio. So if you are happy with the screen, you can save the screen. Click on the current screen header at the top. Then you can enter the screen in the description and click the Save button, and now it appears in your My Saved Screens account. And every time you open up the screen, it shows you the then current results using updated data. So it doesn't show you, if you created this screen in last October, and you opened it today, it's going to show you this week's data, not the October data. So the criteria remains the same, but the companies that pass are going to change over time. So again, in an investment club, I think this is great. You have one you decide on a couple of different screens that you like to see for different sizes of companies, for different types of needs that you have, and then every month you can generate, here is this month's list of stocks to study following our screen. We've looked at a bunch of these in the past. Maybe there's some new companies that have appeared on the screen that would make it worth your while for your members to be doing some research on those particular companies. So here up at the top is the current screen. In the top left, click on the Save button, and now it's saved to your account. So let's a couple of other things before we get into some of the advanced tips. The Export button here allows you to export your screen results to Excel. And when you do that, you get a CSV file that looks something like this. So it's got a lot of, all the values here are raw numbers. So the percentages are all shown as decimals. The prices sometimes have extraneous decimal places. And so it's kind of hard to interpret. But you can go into your Excel spreadsheet and you can reformat it, apply the number types to the various columns, add some formatting, and come up with a very lovely report that looks something like this. Adjusting the cell types, the decimal places, applying formatting, print that out and distribute that if you like to. It's just one way to make it look a little more accessible, and so it takes a little bit of expertise in Excel to make that happen. I mentioned the email results button on the far right. So if you're happy with this screen, you want to send it off to your club, just click on the email button and it says, all right, enter the email addresses of the people that you want to send it to. And we have a project in the works to link this to My iClub so that you would be able to select your current investment clubs from My iClub and send the email would go to all of your club members automatically. If you are a club member who's using this tool, they would get it. You can customize the body text and then click the OK button. They'll get an email that looks something like this. It says, it's got your name on it, and it says, I created this screen. Here is the link. Click on it. It expires in 10 days, so visit it soon and see if there's some companies that you might like there and include your personal message. And so then the user clicks on it, they get a screen that looks something like this. It's a read-only view, so they can't change the screen. They can sort it, they can export it, but they can't edit it. Unless they're a My Stock Prospector subscriber, then they can edit it, bring it into their own account, and modify it that way. So that's another just a real useful way of sharing information with your investment club. Now we're going to spend the rest of our time now looking at some of the more advanced features of the tool. Now these are going to be presented in increasing complexity. So don't fret if, as we go, some of these seem to be way over your head. Other people are going to kind of appreciate some of these complex tips, but a lot of them, as we start off, are going to be things that you can figure out on your own. I'm very confident. The first is the junk screen, which I mentioned earlier. The junk screen is a way of eliminating stocks from a result set that meet your criteria, but for other reasons are not stocks that you want to consider. For instance, penny stocks or stocks that are below $1 or $5. Many clubs stay away from stocks that have very low stock prices, or Canadian companies. Not because we don't like Canadian companies, but because of the currency issues, they get complicated to study. It might be that you just don't want to see companies in particular industries or sectors, so you could eliminate those as well. To create your personal junk screen, go to your My Save Screen section. Down at the bottom, you'll find this junk screen section there. And in order to create it, it's just like creating a stock screen. So you click on the little arrow here to create your screen. Here's what mine looks like. I have a bunch of ticker symbols here. Those are actually Chinese-based ADRs. That's right, I went in, found a website that focused on Chinese ADRs. I took all the ticker symbols and I exclude them using my junk screen. So I searched for all of these ticker symbols. I searched for companies in Canadian exchanges, the Toronto and the Toronto Venture Exchange, etc. So if the exchange shows the company trades on that, I've got more Chinese ADRs, and then finally, if the current price is below $1. So those are my junk criteria. Certainly, I would suggest starting with current price below $1. That will get rid of a whole lot of companies that occasionally show up. Again, I just don't like looking at the Canadian companies, so I would eliminate those. You can use any criteria. So in order to use the junk screen, we're going to search for the companies that we don't want to appear. and then when we click, when we do a screen, there's a button over here that allows you to exclude and then include junk from your results. So this is actually our screen before. We clicked on exclude junk, and we got rid of one of the companies from that list for whatever reason. So the junk screen, very powerful. This came from a user suggestion. One of our Better Investing chapter volunteers who helped with testing said this would be a great feature of the program. So we've added that functionality there. Another great way to use the tool is to look at industry averages. Every industry, and there are about 148 of them, have a record in the prospector database with a weighted average, weighted by revenues of each field. So we have weighted average pre-tax profit margin, weighted average return on equity for an industry, weighted average debt to capital, debt to equity, number of shares outstanding, price, and so it quickly kind of gets nonsensical. Like a weighted average current price doesn't really tell us anything useful in my mind, but we just calculate the average values for all of the fields in the database for each company. So in order to access industry averages, we look for companies with the exchange instead of NASDAQ or New York, NYSE or American AMX. We look for INDUS. So exchange equals industry. That criteria will give us a list of all 148 or so industries. And then we also, from there, we want to define the report. What is it we want to look for? So here's an example where we have the current dividend yield of each industry. We have the current average sales, the current average PE, the average current PE, and the average PE. We have the average 10-year revenue growth, 5-year revenue growth, 3-year revenue growth, 1-year revenue growth, 10-year earnings growth, et cetera, as we go across. Again, I think this is most useful when we're looking at things like margins, pre-tax profit margins, and debt levels. So you can look at those values. But this might be interesting to look at companies that have the fastest, what are the fastest growing industries in the last year, for instance, and see how those companies might be fuel for research, the included companies in that particular industry. So this is one way to get up-to-date industry average data for every industry that we track. From this point, the other thing that we can do is we can look for all of the companies in a particular industry. Whether or not we want to buy them, we can actually create a list of all of the companies in any industry group. There is an industry field. We used it before on the report screen. So here in the criteria, we want the industry to be equal to or the industry in, because we can select multiple industries. So in this case, we have, you start typing utilities and it starts to display a list of all of the utilities. We can select them one by one, and then we would have a list of all utilities in all the industry groups in the utility sector. We could also do the same thing by simply selecting sector equals and then selecting utilities as well. Here is an example of the home improvement stores industry. So created the criteria simply says, show me companies with the industry equal to home improvement stores. And here we have some meaningful data: the average return on equity, average pre-tax income percentage, the trend of pre-tax income for each company, the inventory turnover, the debt to capital. So we have a lot of interesting and useful information about the 7 companies. There's actually 6 companies with one that has multiple share classes in currently in the home improvement stores industry group. So this can be interesting because you can sort by pre-tax income, who has the highest pre-tax income in the group. Obviously Home Depot on average has the highest pre-tax income, followed by Lowe's as you look at the data here. Again, this can be useful when you're looking at a company and you want to know who are the competitors, who are the peers, who are similar companies. This will let you sort them out pretty quickly. And you can go from here and you can eliminate. Sometimes for a very large industry group, I'll add additional criteria. For instance, only looking at companies that have positive earnings in the last 12 months. And that will get rid of those companies that don't fit our investing methodology. So that, again, is another useful way to use the program. Now, as we get a little more complicated here, I've mentioned this before, and we looked at it with the iClub growth screen. Every criteria in the minimum and the maximum fields on the both sides of the slider bars, you can right-click there and you pop up a little pop-up that allows you to set the minimum of each field to be the industry average for that field, or you can even compare the industry average to another field, or you can compare that field to another field in the company's record. So what do we mean by that? Well, industry average current field means that we're going to compare the historic 5-year earnings per share growth rate of each company to the average 5-year earnings per share growth rate of the industry that each company is in. So for home improvement stores, your list of companies might include one company in home improvement stores, one company in airlines, one company in consumer, retail, specialty retail. So we're going to look at those companies and find the ones that have above average growth rates within their industry when compared to other companies in their industry. So that's what current field means. Other field, again, this gets really kind of really interesting, but there are a lot of places where we're measuring debt to capital, debt to equity, for instance. So we could actually be constructing or PEs to earnings per share growth rates. So we begin looking at averages that way. If we didn't have a sort of PEG ratio value, we could say, for instance, show me companies where the current PE is, or the current earnings per share growth rate is below the current PE ratio or vice versa, right? So that would be an example of the other fields that would prompt you to select which field you wanted to use there. But I think it's interesting finding companies that are fastest growing in their industry, that have the best margins and best return on equity in their industry. Really allows you to hone in on high quality, high growth companies as opposed to companies that are underperforming their similar companies in their industry. So again, to get there, you select here and right click, and that will pop open that little window there that allows you to, oops, got to go back here. All right, so that's how we use that particular part of the program. As I mentioned, check this is just a reminder, check the iClub growth screen to see how that industry average field is used in comparisons there. Another way that you can use the program is because you can search for companies that that match a particular list of ticker symbols, we can use the tool as a custom stock report builder. So you can use this to build reports using the companies in your current portfolio, right, or your current watch list. So you could actually be monitoring your watch list. And every time you visited the site and ran that criteria, that screen, it would say, all right, here are all of the companies in your watch list. Here's the current price. Here's the current PE ratio. Here's the current growth rate, et cetera, to help you watch those companies from a fundamental perspective to know if it's a good time to buy. And in order to do that, in the other group, there is a symbol field, and so we want to use condition in So here, instead of equals, we say in, and again, you can type in those ticker symbols and they pop up, and you can select them so it'll match the ticker symbols exactly, that autocomplete function there. Separate them with semicolons and you're good to go. But what's really useful is if you have a list of ticker symbols, if you have a Yahoo portfolio, or you want to export your portfolios or your entire toolkit library list of ticker symbols, you can certainly do that from toolkit. You'll get a list of ticker symbols and you can kind of quickly do a search and replace in Word or a text editor and get very quickly have a report of all of your companies that you're interested in, and that would be just by copying and pasting that information into into the program to find that customer report. And when you do that, you can create your own report. But what some people do is they replicate the Toolkit 6 portfolio reports or the stock comparison guide, right? So they use all the fields from the comparison guide, and so every company on their watch list is now in that comparison, using the fields in the comparison. So your field list would look something like this, but this is going from top to bottom. It's very close to all of the values that are on the Toolkit 6 stock comparison or the Better Investing stock comparison guide. So that's just a real interesting way of looking at the same data just in a different format and being automatically updated. And that would, again, help you to know which of these companies you want to bring over into your stock selection guide. Now, here are 3 advanced spreadsheet ideas. If you're using Excel, you can set up a report that you like to see and then use the VLOOKUP function to index the symbols on a separate data tab. So you'd have that CSV file that you'd update each week with a lot of data on it. You'd copy and paste that into your data tab, and then your good-looking report would be constantly updated, referencing the ticker symbols to give you an up-to-date information. Again, these are very advanced ideas. Another idea is to create averages or weighted averages of various portfolio metrics. For instance, what's your weighted average growth rate or future expected growth rate or historical growth rate of your portfolio by company size? So you could calculate that in your spreadsheet using up-to-date data that comes out of MyStockProspector. And as I mentioned, compare companies' pre-tax profit to its industry averages. So I've just got couple more ideas here for you that I wanted to cover. One is the use of nested conditions. So you might have noticed that we've got across the header at the top underneath the selected fields, we have the condition column, which is right here. Then there's the little parentheses. Then we have the item, the criteria, then there's a close parentheses, and then there's the record count. Well, the parentheses columns, as you scroll down the column here, you can barely see, and it's more obvious in the program. There are little fields that you can turn on and off parentheses, so we can group criteria in particular groupings, and then use the OR function to allow us to add companies to the results of the screen. So perhaps the best way for me to demonstrate this is to talk through this example that I have here. First, up here, we turn on the parentheses. And you can see there's a little red parentheses inside our green starburst here. So we have companies that have historic 5-year earnings growth of 15% or more and have a PE to historical growth rate below 1. So that's the PEG ratio, below 1. And projected 5-year earnings growth rate of 15% or more, and projected total return of 15% or more. And then we close the parentheses over here on the right. All right, so that would give us a list of, in this case, 51 stocks. Now we change our condition to or. Give me companies that have a symbol in this set of companies. And in this case, there's 7 companies on the list, but our record count is 57. That means one of these companies turned up in the above list and would not have been duplicated below. So this function allows you a couple of things. As in this example, you can have a screen of the beautiful, perfect screen that you create. This is how we're finding good stocks. And then you can have an or condition that says, or show me companies that I already own in my portfolio. And then you can rank the companies and see where the companies that you currently own, how they line up with all the companies that you just discovered in your screen. Another way that you can use this function, as I do when I'm looking for companies for our small cap informer, is that I look for companies. In this case, I've got some return on equity ratings, some pre-tax income ratings, so everything's pretty normal until you get down to here. And capitalization below 3 billion or sales below 2 billion. And then I've got my parentheses off. Right, and then I keep going, and a bunch of other quarterly growth and earnings growth has to be a certain value. So what I'm saying is I want to see all these values above, but I want companies within a particular range of size, either by market cap or by sales. Better Investing talks about looking at sales growth or sales as a determinant of size. Sometimes I like to see companies that might have different, might be a little bit bigger or smaller, but their market cap is what the market considers to be mid-cap-ish companies. So in this example, I'm not eliminating companies that might exceed my sales goal if the market cap is still within a reasonable mid-size definition. Right? So this is just another way of letting me find companies that that meet my overall objectives, but giving it a little bit of flexibility in particular situations. So using those nested conditions, and it's very important as you go through these to click on the field totals and running totals up above, so that you know that you're not eliminating every single company in the universe. But when we do this, again, we're able to turn up a list of companies that, again, has some very familiar names on it if you're following the Better Investing approach. Companies like Air Lease and Buffalo Wild Wings showing up on this list, Hennessy Advisors, LCI Industries. So a lot of companies, that's the old was Drew Industries, just recently renamed. So a lot of companies, again, coming up on this particular list that kind of give us a sense of companies that make sense for us as long-term oriented investors. I got 2 more things to show you before we wrap it up. One is you can export the results of your stock study to Toolkit. So you can actually create a Toolkit library, or portfolio rather, with all of the results that that you discovered in your stock search. And the instructions here, there's 7 steps to it. They start with exporting that, saving that, exporting the results with your Excel CSV file. That gets saved to your computer. And then from Toolkit, you go to the File menu, you import company, then there's an option to import several at once from your subscribed data source. Then you click the Import Ticker List button. Navigate to where the export CSV file is. You want to look for that file, select it, click Open, and click OK, and Toolkit will begin the process. It'll say, where do you want me to put these? Just in your stock library, or do you want me to create a new portfolio? And that's what I do. I create a new portfolio. So let me show you quickly how that works. Let's go back to our My Stock Prospector. I'll go to My Saved Screens here. And then I will find that mid-cap growth stock screen that we were working on. So here it is. So I will open that screen up and view the results of it. Then I'm going to go over here and I'm going to export the results. It's going to save those results down to my computer over here. So program is working. Just waiting for that export to happen. So so there it's exported. So from Toolkit, I go to File, Import Companies, import several at once from Subscribed Data Source. So you got a screen that looks like this. That's what we want. We're going to import from a ticker list. So we'll click on Import, and we're going to navigate to where we want it to be. And so here is that export one CSV file, right? So I don't even have to modify that file. I just select it, and there are the companies, the 8 or 9 companies that pass that screen. And I'll say, all right, go out to my data service and bring in those companies, and we're going to create a new portfolio. So we'll call it Mid-Cap Growth 2017-01. So we know what it was, or I'll put in screen as well, so I know that this was a screen that I created. I'll click OK, and now one by one, it's going to import all of the data for those 8 companies. It says files imported successfully. You can see here is that mid-cap growth screen. All the companies are red in Toolkit because there's no judgment, there's no shares or anything. But from here, I can go ahead and say, all right, what is this Monster beverage? I don't know what this company's all about. Let me go ahead and open it up in Toolkit. And there we go. And you say, yeah, okay, that looks very interesting. That seems to meet my upstraight and parallel criteria. So maybe this is a stock that I will do some more analysis on. So the complete tips are linked on every page of My Stock Prospector to show you how that works, and there's a URL there in the handout as well to the FAQ with those complete instructions. And then finally, the roster of quality companies is our automatic screen each month, each week that we run using the data at Stock Central. This is, again, trying to identify stocks that meet the criteria to look good on page 1 of the SSG and section 2A, the pre-tax profit trend of the SSG. But we include the quality rating, the take stock quality rating in My Stock Prospector. It's on a 0 to 10 scale. What we consider for the roster quality is simply companies with a quality rating of 3.4 or higher. So that means that you can create your own take stock quality screen by going to My Stock Prospector, clicking on Define Criteria. We'll get rid of all of the criteria there. We'll go to the safety group when that's done, and we will find that quality rating. So go to safety and then click on quality rating when it displays, and then 3.4 or better is what we consider to be acceptable quality, and that's what qualifies companies to be on the roster of quality companies. So we'll click quality rating. I'll type in the field 3.4. I'll go ahead and just do a running totals. So you can see there's 24 companies that meet the screen. Again, very quickly, we can define a report by adding in 10-year, 5-year earnings and revenue growth, and then we'll add in. We'll go ahead and add in the company name, industry, and sector. Yeah, we'll go ahead and do that for now. Just very quickly running through, and then finally we can view the results here. And so from this point, we can, you can see a lot of these companies have been showing up on some of the other screens that we created. But again, from this point, you can click to view the little SSG graphs and scroll through all of the companies that meet the have met that particular screen. So from this point, the roster, you can include these companies in your other screens. You can whittle it down a little bit further. You can build other criteria on top of it if you like. But it's just a real neat way of again, something you probably didn't know, even if you use Stock Central and My Stock Prospector, that you can get your own roster quality using the screening tool there. Now, it may differ from the company list on My Stock Prospector, Stock Central, between the two tools because of calculation differences and some rounding and the date of data, depending on where you are. But the basics of the companies that pass that minimum quality rating are going to be working out for you. Well, I want to thank you for joining us tonight. I know there's a lot of information, but I'm hoping that it will help a lot of people to get up to speed with using the My Stock Prospector tool. I think it's a really powerful tool. I'd love to see some more sharing of stock screens and people coming up with ideas for new predefined screens that we can include for the benefit of other users. You can talk about that on stockcentral.com or email me there at gerlach@iclub.com. I want to thank you for coming out for our webinar tonight, and I'll look forward to seeing you at many more in 2017. So Happy New Year, everyone, and we'll see you all next time.